The Reserve Bank of India has been bringing its gold reserves back to India from foreign countries. Earlier, a large part of India's gold reserves was stored in the foreign vaults, mainly with the Bank of England and Bank for International Settlements. These institutions are trusted globally, and storing gold there made international trade and transactions easier in the past. However, this situation has now changed. As of September 2025, India's total gold reserves stand at around 880 tons, valued at over $100 billion. Since March 2023, the Reserve Bank of India has brought back approximately 274 tons of gold to Indian vaults. About two-thirds of India's gold reserves are now stored within the country. This is a significant shift because in earlier years, the majority of the gold used to be kept abroad. Now you might ask, why was India's gold kept abroad in the first place? There are a few reasons for that. Since independence, and especially after the 1991 economic crisis, India stored a large part of its gold in foreign vaults. Most of it was kept with the Bank of England and Bank for International Settlements. These places are global financial centers, and keeping gold there made international transactions easier. Gold kept abroad could be used quickly as collateral. It helped India take loans, have currency swaps, and other financial support when needed. In 1991, India faced a very serious situation. The country was left with foreign exchange reserves that could pay for only about 2 weeks of imports. To avoid a complete financial collapse, India had to pledge around 46.91 tons of gold to raise money. It was a difficult and historic moment. Because of this reason, India continued to keep a huge part of its gold in foreign vaults for many years. It provided quick access and global credibility in times of need. There was also a factor of storage and insurance efficiency. Large and internationally recognized vaults like those of Bank of England were considered secure, cost-effective, and trustworthy. So it made practical sense at the time to keep the gold there. Now we have to come to the key question, that why is Reserve Bank of India bringing more gold back home? One important reason is financial sovereignty. When gold is stored in foreign vaults, a large part of India's wealth is under foreign legal and political system. This means that in some global situations, that gold would become difficult to access. We have seen examples of this in recent years. In 2022, after Russia invaded Ukraine, about $300 billion of Russia's foreign reserves held abroad were frozen. Countries like Venezuela, Iran, and Afghanistan have also faced restrictions on their overseas assets at different times. These incidents show that during international conflicts and political tensions, foreign held reserves can be blocked. So by bringing more gold back to India, the RBI is taking a precautionary step. It ensures that the country has full control over its gold, especially during financial uncertainty. This move protects India's economic stability. Another point to consider is that the global policy environment. International relations and trade policies can change depending on the leadership and economic priorities of each country. For example, recently under the presidency of Donald Trump in US, high tariffs were imposed on Indian goods. These kinds of decisions do not always align with India's economic interests. While such developments may not be severe on their own, they show that the global policies can shift quickly and unexpectedly. Therefore, it is very sensible for India to maintain more direct control over its key financial assets like gold, so that the country remains secure and stable even if international policies or alliances change in the future. Another reason for bringing more gold back is to diversify India's foreign exchange reserves, which are expected to be around $700 billion in total. Right now, a large part of these reserves are held in the form of foreign currencies, mainly the US dollar. But currencies can lose value over time due to inflation and changes in economic conditions. sanctions. Also, the US has a very high amount of national debt, which can affect the stability of the dollar in the long run. So by increasing the value of gold in our reserves, India reduces its dependence on any single country. In simple words, it can be said that if one currency loses value, gold can help protect India's wealth. Apart from all this, gold is also considered a non-debt asset. This means India does not owe anything to anyone for holding gold. It is simply owned, not borrowed. Another important point is that gold has no counterparty risk. This means that there is no other institution or country that needs to promise to repay it, unlike the foreign bonds or deposits. With bond or deposits, you depend on another party to honor the agreement. If the party fails, the value can be lost. But with gold, the value belongs directly to the holder. So strengthening gold reserves gives India more financial stability, less reliance on foreign currencies, and greater protection during global economic uncertainty. And finally, there is also a symbolic and psychological significance behind this move. Bringing gold back to India sends a clear message that India is now economically stronger and more self-reliant. In the past, India depended on foreign institutions to store and safeguard its gold. But today the country has the infrastructure, financial stability and confidence to protect its own reserves. This shift reflects the economic maturity. It shows that India is no longer in a position where it needs to rely on others to secure its wealth. The act of holding gold at home reinforces a sense of national pride, control, and independence in how India manages its strategic financial assets. Now, this move by India is not happening in isolation. There is actually a bigger global trend behind it. Many countries around the world are now trying to reduce their dependence on the US dollar and the Western-controlled financial systems. This process is often called de-dollarization. Countries in the BRICS are promoting trade in local currencies, alternative payment systems, increasing their gold reserves as a strategic safeguard. Between 2022 and 2025, central banks of China, Turkey, Russia, and Poland together purchased over 1,000 tons of gold. This is the highest level of gold buying by a central bank since 1967. All of this shows one clear point, that nations do not want to depend on the financial power of any single country. By holding more gold directly, they are increasing their independence, stability, and long-term security. That's it in this video. Thank you so much for watching the video. Please like, share, and subscribe if you want more easy explainer videos like this.